All right, Alok Agarwal is head of institutional research at Mata Securities. Sarvendra Srivastava is technical strategist at Emkay Global. Gentlemen, afternoon. Sorry to keep you waiting. Sarvendra, let me get your thoughts in on what has happened over the last 2 days, actually, and what's going on right now as well. Would you consider this significant? What has happened?
Yes, purely looking at the levels, remains a significant price point where Nifty is currently trading, as we've been maintaining that 5555 is a level to watch out for on Nifty, and a comparable level on Sensex is 18,620 odd. So both those levels are already there. So from here, if at all the longer term trend has to take over and the medium term correction that we are looking at has not to happen, then probably yes, we are there and that is the time. But are we calling that yet? Probably no. We want to be doubly sure as to this is a clear and valid breakout before trying to trade upsides.
Sarvendra, but what is then a clear and valid sort of breakout? We are at 5600 now, 5600 plus. What are you looking for? Any specific signs? Yesterday, pretty much all the Reliance Industries participated big time. All the big index stocks participated. ICICI Bank, Tata Steel, Hindalco. Today, you've got another pack participating. What are you looking for?
See, it's one by one. If you look at it, the BSE Metal Index itself trades at key resistance areas, so we want to see that index breaking out of that area. Currently it trades around the 16,000 mark, the BSE Metal Index, and it's a significant resistance for that index. If you look at Infosys, it trades on a yearly resistance line, just shade 1.5% or 2% lower on that yearly resistance line, around 2900. Reliance continues to trade below a congestion range, so Reliance broke below a congestion range, say at around 1000 odd, and it's been trading below that level since. So even though it has had a meaningful bottom day before yesterday, but that is also not coming back and closing above 1000 odd levels to give us that confidence. Yes, banks are the only things on the heavyweight front where you can clearly say that yes, still upsides could be left, and as long as Bank Nifty holds above 10,800, that is one sector which is already moving out beyond the 2008 highs recently. There are sectors which have done earlier, but banking index remains one of the indexes which is doing it now. So if it is doing it now, probably some more of it is left on the banking space.
So Sarvendra, you're saying although the market is making a new 52-week high, you're not convinced. You're still waiting.
Yeah, see, the reason why I'm saying that is the risk rewards on the upside are phenomenal. A couple of 50, 100 odd points on Nifty here and there would not matter if I'm looking at targets on the upside, which could be easily 64, 65 odd 100 on the Nifty. Then I'm not worried for a 50, 100 odd point whipsaw. I would want to clearly see that it is not a false breakout, and then probably want to enter the market.
I'm going to come to that in just a bit. Alok, your thoughts last 2 days?
Yeah, hi Prashant. We are a little bit surprised by this move. The move has been so strong and has been so aggressive that I must admit that we are a bit surprised, pleasantly surprised though. But I had expected some sort of a consolidation, some correction. We've been, in fact, I think about 3 weeks back when the Nifty had crossed 5550, that was on one day. I think it was the 19th of August, and it had moved above almost, I think, 70-80 points in one day. And after that, it did correct to about 5350. I was looking at some more correction, but that has not happened, and which only goes to show that a lot of money is waiting on the sidelines. You can't really time this market. Overall, probably fundamentals are having the way. The economy is doing well. All the bites, all the signals are pointing towards a favorable run in corporate performances this year and next year. And taking a cue from that, a lot of money probably is flowing in, and picking up stocks at every decline. This also goes to show that you can't really time the markets. And that is why, you know, one has to be prepared to buy stocks which which look fundamentally good from a long-term point of view. So I mean, it's fine. I mean, you know, Nifty going up to 5, 6 or whatever. I think these are all good signs, and I mean, nothing to worry about it. We maintain our stand that India is poised to do well, and the buying season continues. So if you have cash, you must buy into fundamentally strong sectors and strong stocks.
Let me return to that point of, you know, the point that the risks to the upside are so great, or rather the upsides are phenomenal, so you wouldn't mind waiting 100 points, 150 points for solid confirmation. Sarvendra, can you talk about that for a bit? Explain that a bit.
See, all along for the last 3-4 months, since we had this level of 55, 50, 55, 55 in mind, see, every analyst or every trader has to have some cutoff points where he would want to, at least if not take a contra trade, he would at least want to square up his positions. So all the time since we were bearish within the 53, 50, 5400 band, whenever we said that we wanted to sell the market around 53, 54, 55, 50 was the stop loss that was in our mind. So yes, probably on that trade, I would want to exit that trade and stand aside in the market, not want to do anything. But the only observation here within that range was that since that time, we have already passed 4-5 months, and that channel, the 52-week channel which Nifty and Sensex both are trading, is slightly sloping in nature, which means that Nifty is adding 7 odd points every week. So if I had earlier came out with that figure at 55.50, looking at risk rewards then, that boundary itself has moved to 56.30, 55.50. So for a breakout of that 52-week range, which is a 600 odd point range on Nifty, final confirmation on the range would be 56.50. Purely looking at wave principle, for me 55.50 on a weekly closing basis, say for the next 2 days, if we continue to trade above this level and close above that, then probably you would say that the worst in terms of the correction that what the market wanted to do has ended up in a time-wise correction rather than a price-wise correction, and then you would put the marker level at 4786 and not at 4500, which we had earlier been talking about. So it's a gradual process. Earlier we were looking at, say, targets of 44,000, 4200. Looking at the markets, we said that now 4500 should be the base. If this market breaks out on a weekly closing basis above, say, 55, 50, 56, then you would say that the marker levels for the market would become 4786, which is the starting point of this current rally. And then within this setup, you would try and figure out your risk rewards, you would try and figure out your trades, and you will try and see what comfortable trades you can take. So things which are at 52-week highs and you want to avoid, you can, and where you are getting better risk rewards, things which have not probably participated till now, heavyweights like Reliance, Arcom, Bharti, those could be the places that you can then go and look for decent trades with a decent risk reward.
So you're saying, you know, if you have to trade the market long, stick to stuff which hasn't participated. That's what you're saying, Sarvendra?
No, not really. It has to be a mix of everything. So if it has to be a mix of everything, it definitely would have some heavyweight banking stocks, if at all, and that too with a reversal of 10,800 on a closing basis on Bank Nifty. You would want to trade an ICICI Bank and a State Bank, which are heavyweights. You would want to trade a Reliance. You would want to trade ITC, HLL. So it would be a mix. It's not that only underperformance. You would probably want to trade 50% underperformance and 50% outperformance, and then with that mix you want to go ahead.
Sarvendra, had a chance to look at some cement stocks today?
Yeah, I think the way the entire sector is moving, stocks like ACC definitely look good, and 3 to 6 month horizon on that stock, you could easily add another 15% on that stock, the way it has moved today. The sector definitely looks good with the kind of volumes and momentum it has picked up today. Definitely something fresh which has started.
Doesn't it look like a one-day wonder sort of move?
Not really. If you look at something like an ACC, which has been one of our first long-term picks, it has consolidated nicely around the 800-900 range, and now this is the first set of breakout from that, so you could easily continue at least doing an equality of what you did between from 800 odd to 900, and then even in ratio scale, if you do an equality, you can easily add another say 5 odd % from current prices on that stock.
Cement, Alok, any insights?
Yeah, Prashant, we are not very overtly bullish on the sector. The reason is that while the demand continues to be very strong, we see it growing at about 8 to 10% every year, but we also see supplies coming in at a fairly good pace. It's a commodity and a lot of capacities are being built in. For example, my sense is that we are at about, as a nation, at about 240 million tons, and we are likely to go to about 310 million tons by FY12. So you have a fair amount of capacity coming in, so that should keep the any runaway rise in prices under check. What exactly is happening now, I think, is probably, the stocks had been beaten down significantly, and the prices probably had started looking attractive, and some kind of catch-up has happened. I believe prices have, some companies have raised prices in the southern part of India, so probably that has spurred a rally. But I don't see a very strong, sustained rally in the near term, largely because, as I said, that I see supplies catching up with demand, and that should keep the prices under balance. So overall, probably another 10 or 15%, increase from here. But I mean, as of now, I don't think anything beyond that.
Any sort of ideas, Sarvendra? Anything that any stocks you might want to highlight?
See, one thing that clearly standouts is that the international markets continue to look weak and remain weak technically. We have large reversal patterns getting formed on S&P, Russell, Dow Jones and Nasdaq. So unless, or if you go and look at European indices, DAX itself looks pretty weak in terms of what it has done on the way of making patterns, by the way of making patterns, and what it has done with prices lately. So that overhang remains unless until you see those indices also breaking out of their resistances, or there are initial signs of pattern failure. You would assume that within this 52-week range you are at the higher end, and within this range you are at the riskiest point unless until you break out. So you have completed a range, you are at the riskiest part as far as you can go, and if you don't break out, then the next logical thing that you do is that there is some profit booking and you start going down. And the other key thing is that over the period of last 6 months, I think slowly targets for whatever upsides that people had in mind. So we said that the upsides are capped between around 5,400. There were people at that point in time that they said that analysts were saying that it could go till 55, 55, 50. Their targets came. There was a set of analysts who were saying that it can stretch to 56, 50, 57. Now their targets have also come. So in percentage terms, if I started with a set of 30 people who were not comfortable, then it went to 50, then it went to 60. Now I can very clearly see that almost 70% of the people have their targets achieved as far as the best of bulls. And then the remaining 30% can always not believe in that the market could go down. So the element of disbelief is going up, and within this I think the element of surprise and the market breaking out, just taking a contrarian bet could be very high, because now the disbelief is spreading. Best of best targets have come, and from here if market breaks out, I think majority would have no clue why it is heading towards 62 or 64 or 6500 levels. Nobody would have an answer. But that would cross the bridge once that happens. But currently I would definitely want to take a contrarian trade. If the prices tell me, I would take a contrarian trade, because I know that the element of disbelief in percentage terms is much higher than what we were talking 6 months back. Targets for quite a few people who are bullish have been met. So either they are booking profits or taking evasive action or doing whatever, but I don't see that overtly bullish people are left more than 20-30%. So that a 70-30 ratio itself is a good enough ratio to take a contrarian bet of an upside pending.
Right, exactly. So, in that case, Sarvendra, I think we spoke about this earlier when we had you on the show as well. Is it possible from here, because of the amount of disbelief and all of that, that long-held view that at some point everybody will just throw in their towel, that happens, and the market sees an extremely fast-paced 500, 600 Nifty point sort of move, and then the market does what it wants to do. Is it possible that happens?
Why not? As I said, very, very possible if you continue and do a decent breakout out of this range. And with a breakout, you mean you break out 4-5% and hold those levels. You don't come back below the breakout point. So from here on, market should not ideally fall below 5400. 5399 was the high, so you should not fall below that. So you have, right now you've got a 200 odd point cushion. So ideally you should not fall. With this breakout, you should hold. Any correction ideally should not fall below 5500. For 5480, 5500, you should not fall below that. And if you hold that for some time, definitely there would be some amount of nervousness in the market, and then you would see people wanting to get in. But we'll wait and see if that's happening or not. So as I said, I am ready to give it a couple of more days and couple of 50-100 more points before taking a long trade. Short trades, 55-50 stop loss cut. That story is already over. Now, do I want to short again or I want to go long? I have to decide, for which I think I need some time.
You know, the other side of the argument, Sarvendra, is that now that we have come so far, amid all the disbelief and all of that, from 4786 in the current leg to where we are right now, at close to 5,600 plus, you know, what's the risk reward really? You might get a 10%, 500 odd points quickly, but what after that?
See, technically speaking, the moment you go 500 points higher from here, you are trying to attempt the all-time highs at, on the Sensex, you are trying to attempt the all-time highs at 21,206 and say around 6350 odd levels on the Nifty. So those levels will definitely come in, they will definitely come into the picture, and longer term guys would then want to see a clear-cut breakout of that as well. But as I said, let the market reach there, let it show what it has in between. So say from a 5600 to a 6300, what does the index do in between? As eliticians or as people who follow wave principles, we would want to see the internals of that move. So if the internals are impulsive, the internals are 5-wave setups, we would be excited to play for more. But if they are not, and if they continue to remain zigzag overlapping rallies, then probably we would say that there are chances that you could do a intermediate double top at 6350 and 21,000, and then probably do a decent retracement. But I think that is far off. We would want to play this market in 10-15% tranches. So if at all we do a breakout of 5650, first thing that you would want to add technically is 5650 plus 600. That would give you a target of around 6250. And this is a logical target of the 600 point range projected upwards. So you have had a 12-month consolidation which was within a parallelogram. If I do a 1x ratio scale on the upper side for that same channel, 6250 would be the target that you would get. So as I said, upside targets remain decent, and if at all the market breaks out, we would definitely want to play that. But not that I am wanting to play it right now. As I said, I would want to take some time.
You know, hypothetically, Sarvendra, just because, by the way, the markets have shut shop, so you've got a 15-point gain on the Nifty at close, 55.92, 8 points short of the 5600 mark, 18,600 is the closing on the Sensex. A bit of profit taking actually happened towards close. So, you know, mid-cap index a 0.25% down, the small-cap index about 0.5% up. So a bit of divergence there. BankX 0.75% down. You had real estate 1% off. Autos were off about 1/3%. Consumer durables, FMCG, healthcare. So there was a bit of selling which came towards close. 0.5%, actually almost 0.6% gains is what the market was trading with. We got to 56.25 in the last half an hour of this particular session, and left off what about 35-40 points, 35 odd points from the day's highest point as far as the closing is concerned. I'm going to get to stocks in just a bit. Sarvendra, if we hypothetically, if we get to, if we get quickly to 6200, 6250 sort of levels, how would that make any sense to you? Since you look at global markets quite closely as well, so most global markets are looking weak. They're actually making patterns which show you there's probably more downside. And here's a market which is making A new all-time high, not a 52-week high, not a 30-month high, but a new all-time high. How would you read that?
See, that is what I am trying to tell you. Within this 52-week range, we still don't have a decent enough or a valid enough breakout in terms of we have not gone beyond that 52-week range still. For equal number of bulls whose targets have been achieved, there are equal number of bears whose stops have been hit. So someone would have had a stop at 5399, which was the high. Then someone would have had a stop at 5550 like me. Those got stopped out. Now, just at the 52-week high range, it tried to break out of that. Today, 5600, some stops would have been there. So what I'm trying to say is that I want to get convinced that it is not just merely a short squeeze. Fresh commitment has to enter the market at these levels. Is that entering or not is a very, very difficult question to answer in a day or so. You would want you would want to look at prices for at least 4 or 5 sessions a week or so before deciding that could I see some fresh commitment coming on charts, or it is just a short squeeze. So that answer to this question I don't really have right now. That is it a short squeeze only, or fresh commitment has also started. So once that is clear, then I would not be surprised if the market goes to 6250 or 6300. Once that is clear, then I would have no problem betting on a contra trade where now 70-80% of the people, their targets have been met. Either they are sitting on the fence, booking profits, or taking suitable action, but not overtly bullish. I don't see many people having a target of 64-6500 on the Nifty. If at all people have, that would be a handful, 10-20% of the population of analysts that would believe like that. Everybody is watching this 52-week range. Almost any technical report that I see, something on this range, someone has to highlight. So I think there are too many people looking at this range, and that is where probably this range will get whipsawed once.
And the next 100-150 points will give you that answer, right?
Yes, probably yes.
Okay, all right. So we'll get you back on then, Sarvendra. Good talking to you. Alok Agarwal, appreciate your time. Thanks for your insights on the fundamental side to this market.